What's going on? My name's Tony. I'm a full-time trader and I'm the owner of Real Life Trading. Real Life Trading's been around for over 10 years now. It is one of the highest rated stock market education companies in the world because we are honest and authentic, and we give away most of our stuff completely for free because that's what we believe we should do. There's so much garbage out there in the stock market world that we want to prove we're different by giving away what most people charge for completely for free. So check out the links down below to check out our material, go through free online courses, and even get free coaching from a professional trader. Let's dive into these charts. Every single week, I review on Mondays my setups and my plan and what I'm seeing in the markets to help you be a little bit more prepared for these weeks. And also, same thing for me. It's what I do anyways. And so I'm like, let's bring you along for the ride. So let's start here on SPY. I trade the markets a lot. I trade SPY a lot. I'm a big options trader. So SPY last week, man, we just came down and we absolutely crushed through this really important area. This area right through here was just so important. The bulls should have been here last week. They failed to. A lot of volume came in. And so because this should have been a really good bouncing spot, I'm looking for this to be a pretty good rejection spot. So 605 is really going to come into play this week, and I'll be watching that level very importantly. And it's so important to plan ahead. Check out our video that I just posted over this last weekend where I did a quick little planning session to walk you through how I look at charts and how I plan ahead, because most people are always reacting to the past. It's so important that you're ahead of these markets, and it's not about predicting where it's going to go. It's having a game plan. If it goes down, I'm going to do this. If it goes up, I'm going to do this. If we hang out, I'm doing this. And then just watching for those signs and then simply follow out with your trading plan. So I would expect 605 to really hold for the bears. It should rotate down if this sentiment is going to come through. Now, this was very strong sentiment back on Friday. We had so many buying areas that we cut through. The bulls didn't even try to bounce. And so that tells me quite a bit about the strength of these bulls at this moment. Now I'm looking at the options, right? The options are really going to give us insight of where these markets are going to try to go this week. The expected move for SPY is 614 to the upside and 592 to the downside. Now, the option open interest, the big levels where lots and lots of options are sitting, are going to be very important this week. 605 is a stacked wall of calls, and that also matches up with my sentiment level from last week, right? So 605 is going to be a really tough one to get above. If it does break up above 605, it should run pretty hard back up to a resistance of 610. From there, who knows what happens, but it does look like 605 is going to be the spot to watch. Now, to the downside, we've got puts sitting around 600, but we've got a huge amount of puts sitting at 595. 595 is going to be extremely hard for that level to break this week. So on SPY, look for 595 to find some buyers. It's also the bottom side of a trend line here, this black trend line, that it should try to find some bulls this week. We'll see what actually comes into play here, but if 595 does not hold, we are going to open the gates to huge selling potentially. Just the amount of puts sitting here that expire this Friday is ginormous. And so if this doesn't hold, we could have ourselves a watershed moment. That could be a gap across it. That could be a move across it. I would say we got an 80% chance that even if we do get a little bit, it's going to come back up and bounce, and we should be kind of hanging out in here for the week. But if this breaks, it will fall extremely hard. So we want to keep a very close eye out for that. And then 605 is going to be, that's the ceiling. It should be the ceiling for SPY. That holds us lower. And then 595 to 590, expect a lot of bulls coming through there. Other than that, we have to go to a smaller time frame throughout the week to read price action to figure out where we're at. But if you can at least mark out those areas on your chart, put an alert at those spots, now you can have a little bit more of a bias and a little bit more of a lean. If the markets come up to 605 on SPY and you get a really good bear setup for a day trade or a swing trade, it's like that's a higher probability than just shooting out in the dark, right? So hopefully that helps you out. Those are the levels I'm personally going to be watching for my trading this week, and we're going to see how it all plays out. Let's jump over to the Qs now. So the Qs broke through their super strong key bull level last week. So this was a level that I drew on the charts last week. We broke out of a fantastic trend line, super strong. We made good money on this move up, and it just fell right through again Friday. I tried to buy the dip a little bit here on Friday, and I ended up closing out pretty quickly for a 0.1R loss, meaning if you risked $100, you'd lose 10 bucks. I just got out because the bulls were not stepping in at all in the smaller time frames, and sure enough, it closed very, very weak. So where the bulls should have been, the bears now should be. So this area is now going to be a really important bear area. So I'm going to go ahead and switch this out to a key bear area, and I'm going to be watching for these bears in this area to step in, and that area is around 529 to 532, somewhere in there. And in fact, I think we're really going to struggle below this 20 EMA here on a daily chart, which is sitting right around 529. So right at the very, very bottom, just below that key bear area. So keep an eye out for that one. The weekly expected move is 540. The market makers and options are not saying we're going to get much higher than that. It is possible that we do make a new all-time high. Nvidia earnings, we'll be diving in here into Nvidia earnings in a couple seconds and what I'm looking at and the levels that I'll be watching for Nvidia. But Nvidia is going to really run this market this week. Bullish, bearish, whatever. The markets are watching for earnings here on Nvidia to see, do we rampage up, or are we getting ready to actually get a strong pullback? And based on the price action after making new all-time highs for SPY and Qs, it's not looking great for the bulls. This is extremely bearish. And so now it's just a matter of having those trigger points and seeing what should happen and see if that follows through for the bears. Again, bears really should be stepping in here and rotating back down. The expected move down to the bottom side is 516 for the Qs. And so that is a good spot where I believe we should hold. We have a lot of puts sitting at 520. So 520 should be a really good buying spot as well. It also matches up with a nice support zone. We'll see what actually happens where the gaps come in. But again, look for bears in this box and look for bulls down here around 520 to 515 area should be held. And that should be about the low of the week. If we start crushing through 515, then we know that we've got some seriously strong selling going on, and we need to be cautious and realize that there could be opening the doors up to a lot more of a pullback. Now let's take a look over at Nvidia. So I've already kind of done my research here on my option levels, because option levels are the biggest predictor going into earnings. I personally do not trade earnings very often. It's very rare that I will, because it doesn't matter past performances. It doesn't matter how good something looks. The only thing really that matters is how the market perceives the data coming in. They could be, they could be beating earnings and then just down 20% the next day. Earnings are coming out Wednesday after market close, by the way. So just be aware of that. It's going to affect everything out in the markets. Nvidia is a very heavily weighted and heavily watched stock. So my key areas to watch based on option levels is 140 all the way up to 146. So 140 is stacked with calls, and it's also hugely stacked with puts. And so the market makers are definitely paying attention to this level. Moves across this level could lead to very large moves, bullish or bearish, and we're going to want to keep an eye out for this. I could see Nvidia playing back up into 140 quite a few more times coming into Wednesday. And like I said, it's a coin flip, right? Be careful playing earnings on this. Just because they always beat, it doesn't mean that they have to go higher. In fact, if you take a look over here at a monthly chart, whenever we start making wicks off of all-time highs after huge run-ups on monthly charts is normally when earnings start the reversal process. And so we've done this before. This sell-off back here, look how big of a run-up we had. It was huge. It looks very similar to what we have now, except this is even steeper. We had a nice blow-off top up there. Earnings came through, and it started a lot of selling. It was the exact same game back over here in July, in August timeframe, right? And so if we're looking back at this, this is a lot of upper wicks. I mean, a ton. So we are crazy overbought on a monthly. We are way up there. This is definitely a profit-taking zone. If everyone's trying to buy the dip up here, you're going to get burned. It's just a matter of time. In my opinion, Nvidia will be retesting its key levels. I mean, unless we shoot to the moon and get all the way up, strongly up above 180 to 200, if that happens, then my buy the dip levels change. Right now, my buy the dip levels are around like $80 to $60. I mean, it could even go lower if it wants to. It's done this before, and everyone's like, there's no way, Tony. It's possible. When stocks run up, they tend to fall pretty hard. And last time it came all the way down to its 50 or even its 100 on a monthly, that brings us into like $40 down to about 60. And again, I will change my tune. Like as a trader, it's not about being right or wrong. It's about seeing what the markets are getting us. If I get strong multiple monthly closers up above 180, 200, then my buy the dips change and I start taking $40 and $80 off the table. Until then, those are my buying areas. And everyone that's been trying to chase up here because now it's bullish, now it's strong, now I'm going to buy, you're too late to the party. I would say most people struggle in trading because of their timing. Their timing is just way off. You're too late. Understand price action because price action is going to tell you what's about to happen. And price action's telling me momentum is leaving. It doesn't mean that it can't change. Price action is, sentiment can change. Things can happen. But this has been an entire year of upper wicks now on a monthly chart. It is not looking great. And it's now just a matter of will it play out. So a gap up over earnings, clearing strongly on a weekly 150, that could open the door to a run all the way up to 200. I'm not saying this can't go higher. I'm saying it's extremely extended and it's not in a buying spot. It's in a profit-taking area. So we just have to be careful on that. The time to buy Nvidia was 2 years ago, and this is the time to take your profits, not load in. I don't know of a ton of people right now that are loading into Nvidia up here when they already bought down here. Like this was all load the boat territory. Up here now, the reason why this hasn't really gone anywhere is we've had a lot of profit taking. Things can change, and if we do get that sentiment, then cool. I will start buying back in. This will turn back into a buying spot, but it's not yet. Don't be so early and don't be too late. You've got to understand how to see this price action, listen to the markets enough where you can sit back and go, okay, if we get this price action, it opens the door to buying the dip. And so you're not in too early, meaning you're getting it now, hoping for that, and then it just crumbles. You're letting the market show you where it's at so that you can figure out, okay, this new strength is coming in, sentiment's changing. This now becomes a buying spot when it was a previous take profit spot. Until then, though, just be careful. Even if it does run up, we could run to 160, 170 and fall. There's a reason why I said I want strong closures up above like 180, maybe even pushing 200 over the next few months. So keep an eye out for Nvidia. Again, your option levels are just stacked. 140 to 145 is going to be a monster level. I don't know if it can really get up above it, but if it gaps this level strong, it should run pretty good. To the downside, if we do end up getting a gap down, I would expect 120 to 115 to hold based on the options and based on the expected moves for this week. So keep an eye out for that. If we are breaking 115 on gaps or on moves or on anything, it is opening the door for a very large pullback. And so, yes, this can drop a long ways. And does that mean that Nvidia is done? No. The price action, the structure on a large time frame is simply just saying it needs a pullback, but it is far from being done. Even if Nvidia pulls all the way back to $40, it is still a buy. It's just an opportunity. And people will be like, oh, Nvidia's done. It's dropping, 50%. No. If a stock goes up 300%, 400%, a 50% drop is not the end of the world. Will that happen? Very, very low chance. But I just want you to know if it does happen, look to buy the dip. That's what I'm looking at doing at least, because the bulls are still here on Nvidia and I will be buying this thing up at a very great discounted price and then making money for years to come. So just be careful listening to news and be careful trading this over earnings, because again, even if they crush their numbers, we could have a large gap down. A beat does not necessarily mean a move higher. It's how the market interprets it. So I would say one of the biggest mistakes people make when they're trying to make money in trading is they think that earnings are the easy plays. The easy play is see what happens over earnings, right? If, again, we are gapping up above 145, 150, there's some short-term momentum there. And then I want to see what happens in the 160 to 180. But that's an easier bull move and an easier way to make money once the markets tell me where it's trying to get to. right? If we were to gap below 112, that is a very easy short. So instead of buying puts right now and trying to guess that it's going to gap down, or buying calls right now or shares and trying to guess if it's going to gap up, just let it gap. Be okay missing out on the money and seeing which way this thing wants to go. And then once it does that, now you can read momentum. Now it's showing you its hand, and then it's just a matter of riding that momentum, getting a good entry, and making easy money there. That's your easy money. Your brain, again, is trying to look at these big moves and be like, I can make money real quick overnight. You can also lose money real quick overnight. I would much rather just let the market show me what it wants to do and then ride that momentum from there. But I really, really like this trend coming through here. So watch for this area, watch for this red line to get hit going into earnings for short-term day trades, bears, whatever, and then just sit back and see what happens. If we start gapping these, should be pretty bullish. We do have a really large trend line up through here, so even if it does make it through 145, there's a chance it hits that and starts to drop. But just be aware, right? It can do anything at once. React to it. Don't try to predict, and you will end up making much easier money in the stock market. Be okay missing out on what seems to be easy, and you will see that there are easy trades following that, and everyone else is getting stopped out and losing money. You will have sat back, seen the momentum, and you'll be able to make money pretty easily. So that's it for Nvidia. Those are the levels to watch. Put alerts out on your chart. I hope this helped you out. I hope this helps you be a little bit more prepared to make money this week in the markets so that you can be successful and change your life. That is our whole goal and mission at Real Life Trading, is to enrich your life. The stock market has completely changed my life and allowed me to have financial freedom without having to go to a job. I can spend time with my family, with the ones that I love, going out and traveling and living a life that I like only dreamed of. And that's because of trading. But you have to earn it. And it's not easy. I'm not going to sit here and be like, this is all you do is do this and you'll make money. It's like, no, trading is hard because trading makes you look at yourself. If you're not a patient person, you will lose money in the markets. If you are greedy, if you are nervous, if you have self-doubt, if you're trying to prove yourself and your self-worth to someone else by making money in the markets, you will get destroyed. The markets force you to look at what you personally are struggling with and help you overcome those. And once you overcome those, you're not only making money in the markets, but you're also living a more fulfilled, happier life because you're a better person. And that's been my experience. Is I'm a completely different person since I started trading full time, and that was a little over 6 years ago. It's molded me into a better person because it has to. I have to adapt and grow and do hard things to make money in the markets. And so I don't want to discourage you. I want to encourage you that anyone can do this. And by the way, choosing the hard is where the greatest happiness lies in life. So choose the hard and you will not regret it. Come check us out at Real Life Trading. If you want to join and trade with us and trade with me on a weekly and daily basis with some of our professional traders, watching our screens like you're doing right here, live as the market is open, come check us out over at Real Life Trading. Join our memberships. If you are new or just wanted to go through some courses, we have tons, like 20 hours of free, completely free, no commitment courses. Check out all the links down below. We'll walk you through step by step and give you free coaching, one-on-one stuff. If that's what you'd like, we have a professional trader that will reach out to you. You can sign up, no commitment, no nothing. We just want to help you, guide you on the way. If you're like, look, I've been trading for this long and I'm not seeing any profits, cool, this is what you're doing, this is where you need to go, this would help you a lot. Just having someone there to give you direction, because I didn't have that when I was trying to learn how to trade. And because of that, I walked down like every single path that there was to walk down, and it just was a waste of time. If I could help someone go, look, don't spend your time going down this route, just walk this way, keep going, this is what's going to get you your goals and your dreams as fastest way possible, that would be a game changer. And that is a game changer for everyone that does it. So again, it's free. Just go to reallifetrading.com, go to online courses. You'll have a little pop-up thing saying, hey, you want to meet with a professional trader? There's no commitment. Throw in your email. We send you a Zoom link. You jump on and meet. So it's kind of my gift, my way of giving back. Again, I'm paying for the coaching. So I'm paying all that stuff. You don't have to worry about it. It's free for you. If it can guide you on your path and help you, that's all I care about, because that's all we do at Real Life Trading. Again, we could charge for all of this, all the courses, everything. And they're not just like, here's some courses. Like, it's full day trading, swing trading, it's strategies, it's mindset, it's technical analysis. It's everything that people is charging for. And that's what we've been known throughout all the years, is what we do is, and what separates us is that we give away free stuff. So I've been yapping long enough. I don't want this to go too long. The point is, we're going to do whatever we can to help you in trading, and come check us out. Check out some free courses, no commitment asked, and enjoy it. Love you guys. Hope this helped you be a little bit more prepared for the markets. Now just control your emotions, stay patient, watch and see what happens, play those levels, and then press the button when it comes time to execute your game plan. Love y'all. Have a great week. See you guys.